Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, August 8th, 2016. Take a look at the spiders today, folks. Basically a flat day. Markets are near the lows of the day. We had a little bit of a gap up following Friday's rally. Now let me just talk a little bit about this. This is very important. So Friday we saw the markets moving higher on the back of the jobs data. But notice how the market is not getting an extension move today. So you're not seeing follow through. To me, that's a little telling. Now, the jobs data on Friday was very strong. It caused interest rates to jump precipitously. I think the 10-year was up something like 6%. Today, the 10-year is slightly higher again. Now, the negative to interest rates going up is that eventually it creates a situation where investors, certain investors, not all investors, but let's say big investors, say, you know what? Interest rates are now high enough where I want to take a little bit of money from the stock market and rotate it into the bond market to get that interest rate on my investment. And again, it's a lot safer, right? In theory, you're getting whatever 2% or 1.6% or whatever it is at that point in time versus the risk of investing in a stock and then the stock falls. So again, I think that's very important to understand. And the fact that we're not seeing follow through today, I think, is very telling. Now, the volume is ridiculously light, 17.37 million, right exactly at 12 p.m. right now. So that's kind of interesting as well. But again, no follow through makes me question if the move up on Friday is going to be long lasting. Now, a couple things that caught my attention over the weekend, looking at last Friday's price action, the IBB. So this was a very good telling signal. So Friday we saw a pretty solid move up in the stock market, right? The S&P was up, about 15 points, give or take a little bit. What we saw in the IBB, which is the biotechs, which has been a leading force in the S&P, and in the NASDAQ as well, we saw a flat day, no upside. So what I did was I went to the daily chart and I said, okay, well, that's weird. Why aren't we seeing gains there? And then I went to the daily chart and I said, whoa, look at that extended move here. That looks very, very extended, looks like it might need to pull back. What I then did was I zoomed out on the chart and I took a trend line from this pivot low going back to 2014, put it through this pivot high here, and look at what you get right here. Market into resistance on the biotech ETF, the IBB. So that right away said, all right, biotechs could pull back this week. That looks like it's going to be the case. So just a heads up there. I think that's an interesting little indicator too. That's part of the reason why the markets are basically flattish to maybe slightly lower right now on the day. But again, you have to look at certain things because the IBB was leading this market charge higher. I mean, look at this move. Incredible. The IBB in just a month basically up from 240 to basically 300. Incredible move. Okay? But again, we know that moves like that eventually have to have pullbacks, and we know that moves into resistance trend lines, especially when they're this extended, are more likely to have pullbacks. The other thing I wanted to point out to you today, guys, was NVIDIA. NVIDIA reversing a gap up. All right, so again, this is a stock that I believe is probably putting in a top today. First of all, it's ridiculously extended. I mean, just go back to the beginning of the year here. In January, this was at under $25, so it's up over $100 in basically 6 months. Incredible move. The other factor is if you go to your weekly chart, and this is more getting into PPT methodology, which we teach here at In the Money Stocks. It's proprietary information, but you have a time count here on the weekly chart, which obviously we know what happens if you know PPT, you know what happens on time counts. And you have a time count on the monthly chart too. The rarity of two time counts coming on two different time frames that are that different. So you have a monthly, which is every candle is 1 month. That's huge. Basically 30 days. Obviously market trading days is going to be more likely to be, 20 to 23 days or so, give or take. But that's a month, and then you're talking about a week, which is just 5 days. So there's a huge difference between each candle there. For them both to have time counts which signal a potential reversal, that is unbelievably big. And the fact is, you're seeing the daily chart, which we just showed you, having an intraday reversal here from a gap up, and you can see it better on the intraday chart. Here you had a gap up, and look at this thing just come right down, and notice how it's not able to bounce either. That is big. So you have a daily reversal, a weekly time count, a monthly time count. If I had, to make my bet about my top play here, I would say short-term biotechs are going to come in for a few more days. Then if you ask me where I think over the next couple months the big pullback will be, I think it's going to be in NVIDIA. NVIDIA looks like it has literally a 20% pullback in the cards back underneath the $50 level. So again, I just want to point this stuff out to you. Fascinating stuff. I encourage you to come into inthemoneystocks.com and profit with us. This is what it's all about: studying the charts, finding the setups, making the money. Come join us. Take the 7-day free trial.